Hello. Happy Monday. Happy Fed week, CPI week. How is everyone doing? Good morning, John. Good morning, Jacob. Good morning, Patrick. Good morning, Legion Reaver. Hold on. It's clicky. Click's not working. There, I saw your stuff in Discord. Still looking through it. Hello. Thank you for sharing all that, by the way, Legion Reaver. Hello, Charles. Good morning, McRangers. Good morning, Anissa. We have no news. I guess no Sterling. No Sterling yet. All right. Good morning, Heinrich. How are you? All right. Thank you, everyone, for tuning in for another week. By the way, if you didn't already see it, I posted a little early, but the Futures Edge with me on it, Bob, Jim, and me as the guest got posted. So check that out if you haven't already. What do we got going on? Good morning, Royal Palms. I gotta say good morning to everybody, especially to start a week out. We got some bill auctions, and that's about it. Tomorrow, again, we have bill note auctions, business optimism, and 80 API crude oil stock change. But the big day is coming on Wednesday in the morning. We got the CPI numbers. We got the EIA numbers, but then in the afternoon we have the Fed pause decision and their press conference to see what Powell has to say. Yay. So that's where we sit right there. Thursday we have the PPI and of course jobless claims, and Friday we have the consumer sentiment number and inflation expectations. These are still the preliminary numbers. So, and then we get to hear more Fed speak. More Fed speak starting on Friday. Yay for us. All right. In terms of where the markets, we had NVIDIA split is now official. We got our free shares. Got our free shares, but why'd the price drop so much? I thought it was free shares. What do you mean the price got cut by 10? Where's my free shares? Oh, all right, that's where that is. So we got maybe it's sell the post split, except for Broadcom, Apple. We have an Apple event tomorrow. We have Walmart still running higher, and we had this pretty strong bounce in crude last week. We got a nice 1 day pause, potential setup on that. We had dollar index big reversal, gold getting smacked on, all metals getting smacked on Friday with the dollar drastic rebound, and then the change in yields. So we'll get to that in the charts today. Let's do a quick refresh here. Energy leading up 51 basis points. Lagging is financial and consumer cyclical, but not a lot of action so far this morning. We have the guaranteed pause coming in this week. It looks like pause, slightly favoring a pause now, but nearly, slightly. So that changed again on Friday with the unemployment numbers, non-farm payroll numbers coming out on Friday, and then the first cut now projected for November/December. Fear and greed hovering right at neutral, tipping to potential fear mode. So, in terms of earnings, really, nothing today. The only stuff, we got Oracle tomorrow after the close. And we got Casey Jones. Or it's just Casey's. We got Broadcom on Wednesday after the close. We got Adobe and Restoration Hardware after the close on Thursday. But earnings have wrapped up for this quarter. So we'll be sort of waiting for next quarter to kick off. Good morning, Richard. Good morning, Martinez. Only finance person at the store this week due to vacations of others. Will do my best this week, but no promises. Sterling, we always appreciate you being in here and doing whatever you can. So we always appreciate that. And what is this giving people vacations? Giving people vacations. Why? Hey, it'd be a good thing though if you're busy. Car sales then. So if you're not here, we'll know what happened. Is that crude is getting great 20 trick trades lately? Well, that's good, Richard. Good for you. Again, I hope everybody has their strategy down. Key big, let's go look at the macro. Because on the daily, we have waning momentum. We have daily cycles rolling over. Remember, daily cycles rolling and weekly cycles also rolling over. That does not necessarily mean you have to go down. It could be sideways to down. You see here on the weekly chart, severe waning momentum after and divergence after eking out a new all-time high. And we have weekly cycles. So now we're back at the top. That's why I'm going into a Fed meeting and CPI numbers. So the first major level, should we not eke out a new high based we did on Friday, and then the reversal, the high close was back on Wednesday. The high price was on Friday. The key level I'll be watching on a pullback this week is about this 52.72 area on a closing basis. Before that, if we start breaking below Friday's low, then this is the macro. I'll start looking at this 52.95 to 5300 area. Okay, so that's the bigger picture of what I'm watching now. We got up really close to that 53.88 harmonic before the pullback. And intraday today, got to fine tune these levels just a bit. This was a little emotional sell-off with European Open. So 53.57 is the key resistance area, and it's got to sustain above that before I get into anything even remotely bullish in the short term. And the key level for a breakdown for me is our sell-off on Friday and then the bounce back. The sell-off and the bounce back level about 53.40. So those are the two levels, support, resistance. There we go. Again, bigger picture. It's back below the 4-hour rotation zone. We do have a clear path move. The next support before we get to that 52.95 area is right around the 53.10. 53.10. NASDAQ, bigger picture. We're also at daily cycle tops and trying to roll over. We're at weekly cycle tops and rolling over. So keep that in mind. The key level go for this, unless we eke out new highs, is 18,584 on a closing basis. And that's also a very key closing support level. In the short term, again, I'm watching slightly below Friday's low. I'm closer to about 18,925 area to really start a breakdown. We look at the shorter term levels, pretty similar to the S&P. This is going to be 18,980 as key resistance or key support. Key resistance 19,050 area. So it either has, these are the two support resistance areas. So in order for me to go the other way, I'd have to see those levels breaking and holding either up or down. 19,100 is the next key resistance on any break up, and about that 18,890 to 18,900 is the next level of support. The Dow's a different story slightly. Already dailies have started rolling over, a little weaker in the Dow. Friday's lows, which we've already retested, are key around this 38,725. Next level beyond that is 38,6. Key on a closing basis is 38,480 roughly. In order to get anything even remotely bullish, we got to get above the 50 and the top of the rotation zone, which is roughly about 39,000. Russell Russell, very interesting. Closed just above a key support level, but today breaking below. Yet last Friday, it had the 50% harmonic key support level. Just holding right there, but today already breaking. So unless something changes and it could get a close back above about 2026, my key area to watch for, again, is the 1997 on a closing basis. You still technically also have a gap left behind below that of 1972. But 1997 shifts the probabilities if we close below that for a most likely retest of the 200, which is trading right at the 87.5 harmonic. So that's what already we're breaking some pretty key support, but it now needs to follow through, not necessarily today, but with a close below that 1997. VIX going into this week a little elevated, not because of the price action today, but more so with the CPI and Fed numbers. So my next level is about 1350 for more substantial breakdown, or we start trading back below 13 for a choppy to bullish case. The DAX, again, now officially, this was when I was looking already to move the stop down last week. It got close enough with the 50. Still today, technically hit the first thing. So the farthest away the stop would be is on a close above 18,771 or a trade through 18,848. What was I going to say? But we still have a DAX lower for potentially longer. That's where that sits. The notes, we got very dovish. I was surprised that this triggered, but it's really turned into a channeling, just a channel. Key area is technically not invalidated because it never got to the first point, but again, now we also on the yields, we got a percent B buy on Friday. So we got a percent B sell on the just of pure 10-year futures. So we have conflicting signals. Personally, just going to be waiting for the Fed meeting to get out of the way. You see here on the yields, the micro yields, the percent B buy after barreling, triggering the channeling double. So in the short term, based off this, the key area on the yields I'll be watching in the short term is 4.5 on a closing basis going into Wednesday. Dollar index breakdown, massive reversal on Friday. So first very key area of support is about 104.50 to 104.60. What I'm watching for the bull case up is a close above 105.11. Now, crude, again, we got a single bar pause, so we're getting the daily cycles to the top. Weekly cycles are still at the bottom, and this was the first technical close below the 200, but not by much. Anything short term would be watching for a pop to 78 would be the target. Therefore, risk to reward is very tight from my perspective, unless we follow through with a close above 77.50, and then the next target would be back to about 79.50. But I'm waiting for crude to really start shaking out because it did break key support. It's bounced back, but it has not formed a massively strong bottoming pattern yet, and it did officially close below the weekly 200. But interestingly enough, if I hide some of this, let me just take off this so you can see it real quick. This is what was interesting. It technically closed below the 200, but look at this 62.5 on the weekly basis. It did not close below there on the week. So on a longer term, probability shift did not happen yet. It did not happen. That's why I'm still being in. I know on the podcast I said I was watching for the close below this, but it did not follow through with the close below 62.5. So I'm still a little cautious, both to the up and downside. I need a stronger pattern to form. Natty Gas, we closed on Friday above the 62.5, approaching that 75 harmonic, and we could potentially retest the high area from January, which is also the 87.5 harmonic, 3.37. Keep an eye on that because now key support. So we ran up, we based. Look at this, the multi pullbacks into the rotation zone, holding above the 200. So working off the severely overbought condition, getting back to sort of neutral mode in the middle. And now we're breaking out to the upside, especially with Friday, the close above the 62.5 and the close above key resistance. Gold. For the gold bulls, now I am still a long-term gold bull. We broke down, big reversal. You can see here, opening at that 62.5, poking above it ever so quickly, and then slamming back down the other side of the channel. Closing right at the 50. Today, retesting the lows, we have a little micro double. Okay, but any rally even up to 2340 is still down below key prior support, becoming major resistance. What's really important for now, long term, this does not do any technical damage on the super long term, but in the short to medium term, if we close below the lows from Friday, May 3rd, watch out. We've triggered a double then, which is not triggered yet, but could trigger, and then we could be back and re-gravitate to the area of the 200 on a daily basis. We are trying to get to cycle lows on the weekly, and we're still within the weekly rotation zone. But also remember, we had a pretty major divergence up here with the RSI and with waning momentum on that last significant run up. Just gold's at a critical juncture. Silver, still in the channeling double. Going to be watching still for this first target area with the 50, about 28.85 to 28.95. Copper, which finished the double and then is broken down a bit lower, closed below its 50 today. So still going to be watching for a consolidation / rollover plays, just bouncing off the first harmonic projection. The very key area for copper for me is 435. That would be the 50% pullback from the run up and this a minor harmonic projection. What else do we have? Hey, Christoph, how you doing? The 10-year yield climbing back up with the yen. Keep an eye on 1047. So just 105 really on a closing basis. The yen still. This pullback did nothing to invalidate the higher move in the yen on the cash yen, the US dollar, Japanese yen, not the futures. Still expecting that unless we close back below the 50. If we close back below the 50, then at least we probably have a short to medium term top in. But probability says still we could. Now remember, there could be continued intervention. That's why if you're trading this, you got to be on your toes. Euro, we had the little micro double, which you see with the price action on Friday. Remember, we had the rate cut last week, and then this was tough to trade, and now it's followed through with a major breakdown. Also, just looking at pure price action, we closed right at support and have broken it today. So on the pullback area, now the key area to watch for more downside the euro is a close below 107, about 19, 107.20. Spiders, same thing, cycle top, waning momentum. Where Friday's low was 532.54. We're trading 532.86. So if we do break below Friday's low, the key magnet area for me is about 530.80 to about 531. Below that, you still have a gap that's technically not filled to 528.39. And right below that, you have the 50% harmonic at 527.63. To the upside, we got some resistance sitting up at 534, and then very major resistance about 536.25. The Qs, which eked out a all-time high against the major cluster area. See, we had the double cluster harmonics right at that 465 area, just poking above it and closing below. Anything to the upside would be to the gap fill first, 462.96, and then your key resistance now is about 464.25. Friday's lows are very key, 461.85, and then the first very key pullback area for me is 459.20. We're getting to cycle tops on the dailies with the Qs, and we have also the same waning momentum. Bitcoin, still not much to talk about. Still the key breakdown area in the short term is this 66,300. The key breakout area needs a follow-through close, which is not above 71,600. Let's take a look at the good old NVDA. Free shares, everyone, with the price drop. So we're trading 120. It's a 10 for 1 split. So price as Friday divided by 10. Key support is about 115. So that's it. Remember, we've also had a major momentum shift with divergence on NVIDIA leading into the stock split. Now we're post split. So any bounce, I'm watching for potential rollover plays. This is still look how overextended it is from the weekly. With cycle tops and still waning momentum and very overbought. This is going to be I'm telling you, this is going to be the Cisco of the .com days. You watch. What do we got, sterling? Yeah, the snap elections. That's what we have. Dissolving the government and having the snap elections over in France. Well, that's going to be fun in July. You got the Olympics, you got snap elections, and you got terrorist threats. Yay for France in July. Tesla still not doing anything. Tesla's absolutely gone to sleep. Apple, we have the Apple event tomorrow. The Apple event, we completed the 87.5. Apple is expected to announce some kind of AI thing. I'm just updating these harmonics to right here. Should it run and break out, I want to see. Should it run and break out, the key would be 204. But it's trading against very, very, very major resistance right here. So we might get into sell the event with Apple tomorrow. All right. So that's where we sit. Let's peek at the S&P going on to the Monday cash open. Monday cash open. Thank you, everyone, for tuning in. I hope everyone had a wonderful, wonderful weekend. No mini double there yet, so same comments as before. 53.40. If that does not hold, I need a breakdown and retest or a breakdown with momentum, or to break out 53.57 area with a breakout and a retest or a momentum. If it's going to follow through to the upside based on the short term, it'd have to get it close above 53.68 roughly for continued intraday bullish. So at first above 53.57, then above that 53.68 with a follow through close. The breakdown area breaking below that 53.40, really that key area is that 53.14, 53.15 support area if that breaks down. All right, let's just see where the tick opened for Monday, and then we will call it a day and let everybody get to their trading. Pretty weak tick, not horribly weak, but we did spike down below 1,000, so be watching to see on the bounce and then the next tick roll over to see how the S&P, if it holds the support or not. So that's where we sit today. Again, everyone, I hope you have a wonderful trading day, a wonderful trading week. If you haven't watched it already, check out the new podcast, Futures Edge podcast that dropped. And that's about it. I'll talk to everyone later. Bye for now.